There's a building in Washington where 12 people meet 8 times a year. And every time they do, the price of your house, your car loan, your groceries, and your paycheck quietly changes. Most Americans can't name a single person in that room. Today we're going to decode the Federal Reserve. What it actually does, how it moves your money, and why it affects you more than Congress does. First, what the Fed actually is. It's America's central bank. It doesn't print the dollars in your wallet, and it doesn't set your taxes. It controls something more powerful, the price of money itself. That price is called the federal funds rate, the interest rate banks charge each other for overnight loans. Change that one number, and everything downstream changes with it. Here's the chain reaction. The Fed raises its rate. Banks now pay more to borrow, so they charge you more. Mortgages get more expensive. Car loans get more expensive. Credit cards get more expensive. Businesses borrow less, hire less, expand less. Spending cools. And when spending cools, prices stop climbing. That's the entire playbook for fighting inflation. Make money expensive enough that everyone slows down. Now, run it in reverse. The economy stalls, so the Fed cuts rates. Suddenly borrowing is cheap. Mortgages get cheaper, so home prices rise. Businesses borrow to expand, so hiring picks up. Investors pull money out of savings accounts because they pay almost nothing and push it into stocks because that's where returns are. This is why markets celebrate rate cuts. Cheap money lifts almost every asset price on Earth. So where does new money actually come from? Not a printing press, a keyboard. When the Fed wants to inject money, it buys government bonds from banks and pays by simply crediting their accounts. Money that did not exist a second earlier now does. This is called quantitative easing. After 2008, and again in 2020, the Fed created trillions of dollars this way. And here's what they don't put on the front page. When trillions of new dollars chase the same amount of stuff, each dollar buys a little less. That's inflation, and it works like a hidden tax. Nobody voted for it. No bill was passed. But every dollar in your savings account quietly lost purchasing power. Cash sitting still is cash shrinking. Notice who wins in each direction. When rates fall, asset owners win. Stocks rise, home values rise, businesses get cheap capital. When rates rise, savers finally earn interest, but borrowers get squeezed, and it's the indebted middle class holding the mortgages and the car loans. Heads or tails, the people closest to assets win, and the people living paycheck to paycheck absorb the shock. Why does the Fed have this power with so little oversight? By design. The Fed was created in 1913 after a series of banking panics, and it was deliberately built to be independent from politicians, so that no president could juice the economy before an election. The trade-off: enormous power over your financial life, held by people you will never vote for. So what do you actually do with this knowledge? First, never fight the federal. When rates are falling, being invested in assets has historically been rewarded. When rates are rising, cash and short-term bonds finally pay you, and expensive debt becomes an emergency. Second, watch the Fed statements, not the news panic around them. The direction of rates tells you the direction of the tide. Third, and most important, understand that inflation is a permanent leak. The Fed itself targets 2% inflation per year on purpose. That means the dollar is designed to lose half its purchasing power roughly every 35 years. Savings accounts alone cannot beat a system built to shrink them. Owning assets isn't a luxury. In this system, it's the only defense. 12 people in a room, moving the price of money, while the rest of the country argues about everything else. You can't vote them out, but you can learn their playbook and position yourself on the right side of it. If this opened your eyes, subscribe. Every video, we decode how money actually works. Because the people who understand the system are the ones it works for.